Hey, Wednesday. What's up, everybody? Welcome to the Wednesday morning edition of the Daily Market Commentary. Hope you guys all had a great Monday and even better Tuesday as we are on our hump day of the week, about to do what we do every day, looking at our big picture markets and then finding our stock of the day. This is one you don't want to miss. Hang on till the end. I feel like it could be a good one. But before any further ado, make sure if you're a regular viewer, you hit that thumbs up button, hit the like. If you're not here regularly, come join us. Hit the subscribe button. And if you've got a stock you want to look at, leave it in the comment section down below. That way I make sure that I cover it in our next video. So, okay, without further ado, let's get started with the big picture. So in our big picture today, we are up a little bit this morning. We're up, when I say a little bit, I mean a little bit. 0.1% we're up in the S&P. As the S&P yesterday, let me kind of zoom in on what our S&P looked like from yesterday. We did come into our supply level yesterday, and we traded about halfway into the level before then moving off of that zone. So if you were able to catch that trade, hopefully you were able to turn a little bit of a profit from it. And the demand level that we talked about on the 15-minute chart met entry and then gave us a nice move away. So when we look at this, it was both the demand level down below as well as the supply level up above. Well, since both of those have been now used and we're basing in front, I think it makes sense to remove it completely. Now, we are putting in a bit of a pinching pattern right here. And this triangle pattern, if you will, that we're putting in, a little bit of a symmetrical triangle pattern, is not a traditional triangle breakout pattern. It's actually just a bit of a stall. Now, I would anticipate typically these patterns, especially in the context of a bigger picture upward trend, are going to break out to the upside. And that's a little bit of a bull flag pattern that we can see here on the 4-hour chart. If I look at this on the daily chart, you can certainly still see it. Now, what else do you see? Well, what else I see is a bit of a rising wedge pattern, right? A little bit of a rising wedge pattern, which is usually actually a bullish sign. And so if I take a look at the momentum indicator, we'll see that our momentum is continuing to show lower highs while our price is continuing to show the same highs or higher highs. And so while I'm not going to be overly bullish or overly bearish right now, I am going to be overly cautious and not jump into a long-term position one way or the other. I think ultimately, it's difficult to go against the big picture trend. My big picture trend is most decidedly, still up. However, we see that our momentum is slowing. So I'm just going to be very cautious and allow levels to set up and form. I'm still certainly going to talk about a breakout above the all-time high as being a potential trade, provided that we get basing in front of it. But without the basing, you could just pop above it and then come right back down. So just keep that area in mind and the fact that we are a little bit sideways. Now, the Nasdaq, which had been underperforming, is nowhere near its all-time high. It's got plenty of room to run. The 4-hour is actually still in a bit of a downtrend, whereas in the S&P it's in a bit of an uptrend. In the Nasdaq, we're still in a bit of a downward trend on our 4-hour chart, and so a bit more bearish in the Nasdaq than we are in the S&P. Now, that being said, we don't have any quality supply levels until we get way up here at 13,087. We did in the overnight last night put in a little bit of decent demand right here. So you might get a little reversal off of this demand area there if you want to try for a day trade, and that should get you about a 2-to-1 at the very least. Next, crude oil. So crude oil yesterday, we had, oops, not the Russell, excuse me. I'm on the wrong charts. Crude oil yesterday, we had an area that we said if we get basing in front of this level, we can anticipate a breakout. We did not get basing in front of that level. Matter of fact, we gapped up and broke above our line. This would not be considered a false breakout. A lot of traders would say that this is a false breakout, and they would be wrong. This is not a false breakout because it's not a breakout. We did not get the prerequisite basing necessary before entry in order to get a breakout trade. Now, price eventually did come back to our little area of demand, and we got a little move away off of that demand level. And so since we moved off that demand level, I'm actually looking to see if we then break below here as the next thing. So let's look for potential breakouts in crude. I think are going to be the better trades and the better setups. And I still think that the breakout up here is still valid, provided that we get enough basing. And then last is gold. Now, gold, I will tell you, we were chopping along sideways, and we said, hey, maybe there's an iron condor available in gold. And then the market sold off, and we got a little bounce off of our demand level. It bounced for about a 2-to-1, and then 6 candles later told you, hey, you should probably get out of this thing. And then it gave you another chance to get out as it kind of chopped in here, and then came to our lower level of demand. Now, we came to the lower level of demand, which is this rally-based rally area back here, and immediately cut right through it. We cut right through it, but we didn't get below the pivot. Either way, you may not have stayed in through this longer wick down here. It's a pretty sharp pullback. And if you stayed in it, then 6 candles later it told you to get out anyway. So point being is that we have seen a lot more of a bearish turn here. Now, we were talking about the fact that we could have gone bearish on Sunday night when we were looking at our GLD position in the options trades. We thought that there was a chance that it could go bearish just based on that price action alone. Now, here would be our next reversal point if we do come back up into this region. And the reason I'm looking at this is because of this area back here. Remember, in a fair price value area, old support oftentimes acts as new resistance, and we can certainly see price coming back into that region. So those are our 4 major markets for today. But remember that oftentimes the Nasdaq is going to be governed by the largest stocks that are in that Nasdaq. And so with that note, we're going to talk about our stock of the day. So our stock of the day today is Apple, AAPL. And everybody knows Apple. Everybody knows that Apple is the largest stock, essentially, in the S&P and in the Nasdaq. And really, it's considered a major market mover, right? A pretty big major market mover. Well, one of the things about Apple is that there are some quality areas of demand down here that have not been retested in a really long time. And ever since Apple had that 4-to-1 split, we had that 4-to-1 split last year on August 31st. And the split happened here. The stock just didn't take off like everybody anticipated a split would take off. If we go back and look historically, there was a number of years ago that Apple did a 7-to-1 split, and it's not even showing up in here. Where is that split? Here it is. Here was when Apple did a 7-to-1 split way, way, way back in the day, is what it seems like today. And that 7-to-1 split allowed people to kind of get in, and it really went up straight up after that 7-to-1 split, right? And by the way, you feel like a genius if you bought that 7-to-1 split. Well, now the 4-to-1 split is not really doing the same thing. And so the question now becomes, as an investor, long term, is Apple a good hold? Well, Apple could very well be a good hold, certainly if it's a purchase down at a price where you're willing to own it. And there's a couple of areas down here that might make sense. So how would we take advantage of that? Well, you could certainly look at selling puts. You could certainly look at maybe selling puts to acquire the stock. But what I'm most concerned with right now from a technical perspective is the fact that we are in a bit of a daily downward trend, and I've got a little bit of a descending triangle that's forming here, which is oftentimes a key for a breakout. Now, we're going to open up today, looks like around 121.80. So we're going to open up but still be inside of this triangle and below Monday's high, although we'll see if we can get above Monday's high, which was 122.58. If we have a hard time getting above Monday's high of 122.58, I think that there's a chance that we could see price continue to fall. Now, how far would it fall? Where's our next stopping point? Well, in looking at that, I'd have to look to see where's my opposing areas of demand. And I would say that this would be your first stopping point where price would come down, where there's probably some buy orders remaining. So right there around 111. But then if we get beyond that, you seriously are looking to test around 100 in Apple. And so how can I profit from that? Well, once again, you can take the bear put spread and short it if it comes down below this level. But I'm not saying to short it today. I'm saying you got to be a little bit patient and wait for the right setup. And the right setup would be, do we get lower than the prior candle's low? This is normally an island, this is kind of a gap and go scenario here with what we had yesterday. But we don't want to get low until we don't want to get short until we get below this candle's low at the most aggressive entry. A less aggressive entry would be to wait for basing and to get short below this 116 area, which is the bottom of our descending triangle pattern. So just an idea, something to keep on your radar screen for today. If you guys have any questions, as always, send me an email, support@tradersarmy.com. Till tomorrow, everybody. Hope you guys have a great day. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.